Hello, this is Dale, and this is another mini course on the first of three strategies that I use in my own portfolio. These are the only three strategies I use other than just trading stock, and I use the same principles behind swing trading the trend for trading stock as I do for trading directional calls and puts. So what you're about ready to hear, the three strategies, are everything I use in my portfolio. First of all, let's go over the indicators that I use. And we've talked about all these indicators, what I use for directional trades, for calls and puts. On the left-hand side, I use the regression channel with plus or minus 1 standard deviation and plus or minus 2 standard deviation, looking for stocks that are overbought or oversold. Then I look at the money flow index. If I'm looking for a trade on the put side, I want the money flow coming out. It's only, and when I'm looking for a call, I want the money flow going back into the stock. It's only when I have these two together that I'll go to the right-hand chart. I've got to have these two together to go to the right-hand chart. In other words, this is the current trend as confirmed by the money flow. Now I'm going to go over to the right-hand chart for my timing of the trade. What I'm looking for over here is on the chart up here. Of course, I use candlesticks on all charts, but what I have here is the 5, 8, and 13-day exponential moving average line. I call this the Fibonacci ribbon, if you will. And I'm looking for, if I'm looking for a call, I'd like to see the 5 and the 8 above the 13. The other thing I have down here is the macro MACD, which I've explained. It's the daily version of the weekly MACD. And I'd like to see a ready, set, go. So an example here is this date was a ready day. It was a change of color. Then the next day was a higher high, and the next day beyond that was a continuation thereof. Now, we did have a pullback on this trade, but you can see ultimately led to a very profitable trade. So these are the indicators I use: the regression channel, the money flow index, the 5, 8, and 13-day exponential moving average line, and the macro MACD. Now, these three strategies, the strategies for directional trades, the strategies for theta, which is strategy number 2. Strategy number 2 will be theta trades, and then the best way to trade the weeklies is strategy number 3. I took a double up challenge in 2014, and what I was trying to do is take a portfolio of $25,000 and double it by the end of the year by just utilizing strategies 1 and 2, directional trades, calls and puts, and credit spreads or theta trades on the RUT. You can see that I never had a losing month as we went through the year of 2014. I ended up the year over 138%. These trades are all based on what was released on the nightly blog. Compare this to the S&P 500 that had 2 losing months, and it had a profit last year of 12.5%, but this 138.5 sure does do a lot better than the 12%. Once again, this was a record that was documented. It was using strategy number 1 on swing trading the trend, using calls and puts, and using credit spreads or theta trades on the RUT. Each trade was made at $1,000 per trade on the directionals and $10,000 margin on the theta trades. Let me give you an example of two trades and let me walk you through my thinking as I put these on. The first one is with PepsiCo, PEP. And you can see over here right around February it had a low over here, and that was oversold at this point in time. The money flow actually started coming back into PepsiCo, so I went from the left-hand chart to the right-hand chart. At this point you can see I had a ready, set, go. We got into the trade, had a little bit of a pullback, and then it just blasted on up, following the ribbon all the way up. We had a couple pullbacks here, but it never, the 5 and the 8 never crossed over the 13, and that's what I'm always looking for. Finally, I did take profits here when we hit a Fibonacci extension at the 261.8. We bought the April 72.5 call for $6.28 and sold that 2 months later at $12.80 for a little bit more than 100% return on that trade. Once again, here I was looking for something that was oversold. When the money flows started coming back in there, I went to the right hand chart. I was looking for a change of color, ready, a higher high set, and then a continuation go. I was looking for the ribbon to cross over, which it did, and it never crossed back until it hit the 261 of the Fibonacci, which is a fully extended. And it was interesting because at that point it was getting very close to the +1 on the regression channel, so I thought that was a great place to take profits. The second example is an actual trade we had on Amgen, AMGN. We did that in May. You can see it was oversold. The money flow started coming back in. It wasn't great, but the money flow did change direction and start coming back in. So I went from the left hand side to the right hand side. You can see right down here, early portion of May, it had a ready, set, go. The ribbon crossed over, and the ribbon never, the 5 and the 8 never crossed over the 13. Bounced off there, bounced off here, and continued on up. We finally got out in August, so that was a little bit more than a 3-month gain. This was stock. I bought the stock down here at $111.48 a share and sold it at $137.27 for $2,575 per 100 shares. And that's how I swing trade with the trend for puts and calls. And this last one on Amgen shows you how I do it on just stock. Now on the nightly blog I really do not talk much about stock. The majority of my portfolio is made up of stock, but I also do use puts and calls, directional puts and calls, theta trades, and weekly options.